Hello, good morning, dear students. I welcome you all to this online class GST in India, a simplified overview, part 6. Here I am Dr. Prasad Goenka, Associate Professor and HOD in the Department of Commerce, Rabindranath Tagore University. In today's class, I will especially explain the dual model of GST and bifurcation of taxes in the GST system, that how the taxes are divided between the center and the states, and the input tax credit, how it is set off or adjusted with the output taxes. So this is very important. Please note, students, that before watching this video, you must go through my earlier videos, especially the practical classes of part 4 and 5. Otherwise, you may not follow this video. And for my upcoming videos on accounting entries on GST, that will be suitable for you to follow in future. If you follow the continuously video, you should maintain a continuity in watching the videos. That will be most easier for you, I think. So let us go ahead with the next slide. So here you see that in case of GST in India, we have a dual GST system. It means there is a mixture of two taxes, that is central and state, that is dual. Half of the share will go to the state, that is including either UTGST or state, that is union territory or state. So I will not use the separate term for union territory. When I talk about the state, you understand that it may be union territory or it may be normal state. So dual GST includes central GST plus state GST. It is applicable only in case of intra-state transaction, that is sale within the same state. And IGST will be applicable only when there will be interstate transactions. So in case of interstate transactions, when the goods are sold from one state to another, in that case CGST, SGST will not be divided, but directly we will be using the term IGST, that is integrated sales tax. So here you see from Delhi to Delhi, it is within the same state. In the locality of Delhi, say from Dwarika to Chandni Chowk or from Old Delhi to New Delhi, so it is within the state. Chandigarh to Chandigarh, Jaipur to Jodhpur, Mumbai to Pune, Kaziranga to Kamakhya. So all these are within the state. So here suppose 100, a product of rupees 100 at the rate of 20% GST, then it will be GST will be 20, so it will be half divided, that is 10 plus 10. So 10 CGST and 10 SGST. In this way, in each cases you see, in case of Chandigarh, it will be UTGST, you see. Otherwise, it will be CGST, SGST. Okay, I think that you can follow it very easily. Now we proceed further, that you see in this interstate case, you see that in all these cases, interstate case, I will not elaborate it because in my earlier videos I have explained these things a little bit. But today I am explaining that sharing part between center and state. So here you see, in case of interstate, wherever the sale is made, in all cases, either it is a UTGST, state GST, in all cases we will be writing IGST 20. On 120% tax GST, we will write IGST 20 in all cases, not GST. GST is not clear. We have to write either CGST, SGST or IGST. So here in interstate cases, we have to write IGST 20 rupees. Now another important point that is to be noted, that IGST minus ICS I have written here. So from IGST can be adjusted, can be deducted. From IGST central, CGST can be deducted. From IGST SGST can be deducted. So from IGST all taxes can be adjusted. This is important to note. You have to remember it, understand it properly. CGST minus CI, it means from CGST can be deducted or IGST can be deducted. Again from SGST, from state tax, state can be deducted or integrated IGST can be deducted. So what we can understand, that from IGST, center and state both taxes can be deducted, and from SGST, IGST can be also deducted. But first IGST, second central CGST, then third we will deduct state SGST. But CGST and SGST, I have put here head sign that here I mean that CGST and SGST or SGST and CGST, these two are not, the cross credit between the two are not allowed normally. Normally these two are not allowed. Exceptionally, I will talking to you regarding this in the next slide. So I think that to make it easy, I am giving you one formula, one clue that you remember that I am always adjustable. I am always adjustable. It means I can be adjusted in from all and all can be adjusted from I. Understand, I think that IGST can be adjusted from all means I can be deducted from I can be deducted from C, I can be deducted from S, and from ICS, all three can be deducted. But the seriality must be maintained. First, from I will be deducted, then secondly from IGST, CGST will be deducted, then from IGST, state GST will be there. I think that you can follow it well, very well. Okay, then I should proceed further to the next slide, I think. So here in the next slide, you concentrate here that you see first is the raw material supplier. Raw material supplier will sell the product to the producer. Producer will sell the product to the wholesaler, and wholesaler will sell the product to the retailer, and from the retailer customer will take. So here you see these are the levels of distribution system, and I have taken the same case of the earlier video my, that is 100 is the price of the product and 20% is the tax GST. So here I will show the bifurcation of the tax, that is 20 rupees will be divided between the center and state half, that is 10 and 10. So 20% is divided half, that is 10% will go to the central and 10% will go to the state. So this is the first case. In first case, no input. So here it is written no ITC benefit. So in the first, being the first personal, no input tax credit will be there. So nothing to bother about in the first case. From the second case, our understanding you have to follow from the second case. So producer, in case of producer, while solving this problem, student, you think that you are a dealer, then it will be easier on your part, because being a dealer you have to purchase the commodity as well as you have to sell the commodity. So while purchasing, you see below, you see while purchasing you will have to pay the tax, that will be treated your input tax receivable. When you purchase, you are producer, suppose when you purchase from the supplier, then at the time of purchasing you have paid this rupees 20 rupees tax. So it is input tax, input receivable, because at the time of purchasing what you pay, it is receivable because you have to take the benefit of this. It is incoming. Purchase is always incoming, so input tax is always input, it is incoming, it is receivable. And at the time of sale, at the time of selling, producer will charge from the wholesaler. Producer will charge from the wholesaler. So he, at the time of sale, he will collect the tax from the wholesaler. So at the time of sale, whatever the tax collected by the producer here, so it is outgoing. Sale is always outgoing. At the time of sale, we sell out the goods. So as the goods goes out, as the product goes out, so tax is also is output tax, it is payable. So at the time of purchase, tax is input tax, it is receivable, it is treated as asset. At the time of sale, the tax collected is output tax payable, so it is a liability. It must, the concept must be clear, otherwise it will be difficulty on your part while solving the accounting entries in the later part of my videos. Now you see here, we should start from the beginning. Here you see raw material supplier now charging rupees 10 and 10, that is CGST 10 and SGST 10 from the producer. Now you see for the producer, this rupees 10 and 10 is the input tax. So for the producer it is a benefit, and this benefit is how? Because it should be deducted, it should be set off. Producer while paying his tax liability on his sale, he will take the benefit of this tax, it will be deducted. So you see producer will sell this product to the wholesaler 100 plus 50 at 150, 150 on 150 to at the rate of 20%, tax will be how much? It will be rupees 30. So half of the tax will go to the center and half to the state. So on 150, 30 rupees tax will be equally divided. 15 rupees will be CGST, 15 will be SGST. But I have not shown it here 15, 15 CGST. Why? Student, please note. Here I have written interstate sale. You see that first was the local sale, then only CGST, SGST will be coming. Second case, producer is selling goods to the other state to the wholesaler. Suppose producer is at Delhi and wholesaler is in another state, Bihar, Patna, or say in Assam. So from Delhi to Patna or Delhi to Guwahati. So in other state, when the goods are supplied, then it is treated as interstate sale. In case of interstate sale, no CGST, no SGST will be applicable. In that case, IGST will be applicable. So CGST we will not write anything. SGST will not write any. For your understanding, I have given here nil dot I have given, but you need not write anything. Directly we will be writing CGST, IGST. How much? On 150, 20% is equal to 30 rupees. So producer will charge from the wholesaler in the other state, he will charge rupees 30 and he will pay to the government this rupees 30. Now important point is that this 30 is the output tax on sale. It is payable. It is liability 30 rupees. But he will not pay rupees 30, but he will take the benefit of this tax which has already been paid by him, because producer has paid at the time of purchasing from the supplier 10 CGST and 10 SGST. So it will be deducted from the IGST, because as per our rule, from the IGST, CGST and SGST can be serially deductible. First we will deduct IGST minus IGST, but here is no IGST in the first case. There is no IGST, not applicable IGST in first case. So from 30 rupees, first CGST 10 will be deducted. Then from 30 rupees, SGST 10 will be deducted. So here you see point number, you see 1 CGST, 2 CGST, note 3 IGST, note 4 output tax CGST, note 5 SGST, then note 6 IGST. So here you see from the note 6, this is note 6, 30 rupees. From this 30 rupees, this 10 and 10, CGST 10 and SGST 10, that is 1 and 2 will be deducted. 10 CGST and SGST 10. So 30 minus 10 central tax, 10 state tax. So 20 will be deducted. Then how much he will pay? The producer will pay, instead of 30 rupees, he will be paying only 10 rupees after deducting this rupees 20. So 10 rupees is payable for the producer only as a GST tax, final tax payable. So to whom it will be paid? To the government. Which government? Now you see it is IGST 30 payable. So IGST payable 30. So 30 minus 20. So how much balance remains? Balance 10 rupees is remaining on from the part of IGST. So it is the balancing part of IGST. Hence it will be payable to the IGST tax to the central government, because IGST also goes to the central fund but in the account of IGST. Okay, I think that you can follow it. So should I proceed to the wholesaler? If you have any doubt, you can put me any query. I will try my level best to reply you. Now here you concentrate again on the slide, that wholesaler is purchasing from the producer at 150 plus 50. So his 50 rupees is his margin of profit. So 150 plus 50 is equal to 200. On 200, 20% tax, it comes to rupees 40. So 10% will be to the central government and SGST 10% will go to the state government. So that is 40 will be half divided 20-20. Now you see this is payable 40, but wholesaler will not pay 40. Why? Because he will take the benefit of this input tax. Input tax is what? He has not CGST. He did not paid CGST. Neither he paid SGST. But what he paid? The wholesaler, while purchasing from producer, while purchasing from the producer, wholesaler paid 30 rupees tax. What? That is IGST. So from this CGST and SGST, IGST will be deductible. I told you in the earlier slide that from the CGST and SGST, IGST also deduct. I is always deductible from all, and all is deductible from I. So we can deduct this from the integrated tax, that is IGST. Now you see wholesaler is selling to the retailer. It is a local sale, so it will be Intra-state, so we will writing here CGST and SGST, and you see here 20, this is first CGST will be deducted. So IGST balance is 30, so 20 will be deducted. From the, you see CGST is 20, so from 20 IGST benefit 20 is taken, because out of 20 we cannot deduct 30, we will take the advantage of 20 only. So 20 minus 20, so CGST is payable. You see here number 7 minus 6. So from 20 to 30, 20 will be fully deducted, so there will be a balance of 10. This 10 rupees balance will be deducted from the SGST. So SGST is payable how much? SGST is payable 20. But here from the IGST 20 rupees CGST is deducted, then balance remaining is only 10 rupees. So this out of 20, 10 will be deducted, and finally rupees 10 is payable. That is the SGST payable, you see. Because CGST we have deducted here, complete deducted. CGST is not payable because it is adjusted from the IGST 20 rupees. Now after adjusting CGST, 10 rupees is remaining here in the IGST balance. From this balance, SGST out of 20, 10 will be again adjusted, and finally 10 will be due. So 10 rupees, wholesaler will pay rupees 10 to the state government as SGST. Okay, so now we come to the retailer case. Again, retailer purchased from the wholesaler. Here you see in the slide that he purchased from the wholesaler in rupees 200, and 50 rupees he will take the profit, that is called value addition. So the 250 will be the price of the product. On 250, 20% tax will be how much? It will be 50 rupees. So 50-50 will be divided between the central and state. So out of 50, 25 will go to the center and 25 will go to the state. We can take half, the 20% tax, so we can take 10% state and 10% central. In this way we can divide, but it should be always equal. So 25. Now you see CGST. This is again payable to whom? To the CGST 25 is payable to the central government. SGST 25 is payable to the state government, because this is on sale. Because retailer is selling to the customer, so he is collecting this 50 rupees tax, CGST and SGST 25 from the customer. So it is payable. Whatever he collected tax from the customer, it is payable to the government, but he will not pay this 25 and 50 rupees, but he will adjust it from the tax he has paid. How much he has paid? You see CGST he has to pay 25, but he already paid rupees 20 at the time of purchase. So this 25 minus 20, that is note number 9 minus 7. So here you see 9 minus 7. So CGST output is equal to 25 minus 20 is equal to 5 rupees CGST payable. So retailer will pay only 5 rupees to the central government at GST. And state GST, you see 25 is payable on note number 10, and here note number 8. So 10 minus 8, you see. So as from SGST, first SGST will be deducted. So 25 is payable and 20 is paid. So payable 25 minus paid 20, that is output minus input, is equal to final tax due 5 rupees. So I think that then you can follow it very well, that output tax minus input tax is equal to final GST payable, and if IGST is payable, then we will pay IGST. If SGST is payable, then the dealer will pay the SGST, or if CGST is payable, then in the CGST account he should have to deposit the tax. Sometimes there may be a minus balance, credit balance. If there is a minus balance, it means still the balance remains in hand. Suppose here in this case, after adjusting here, there is no minus case here, you see, but sometime it may happen here 5 rupees is balance payable, so he has to pay the tax. Sometime it may happen that there is a 50 rupees balance and you paid 40, 10 rupees is still in input. So that input will be adjusted from some other transaction. The dealer or the trader or the businessman has the facility that he can adjust according to his convenience the tax with any other transaction, but he has to maintain the norms of the accounts from IGST. This is the rule I have repeat here. You can see from IGST is first deducted, then CGST, then SGST, and from CGST, CG2 deducted, then IGST will be deducted. No SGST. And from SGST, first SGST will be deducted, then any balance remains, then IGST will be deducted. But from CGST, SGST, no intercredit will be deducted between the two. Between SGST and CGST, no in between the central and state, no corresponding credit will be allowed. But nowadays, recently, according to a circulation, under certain condition that if the cash deposit has been made or there is a cash ledger balance, then according to after filling up the PMT 09 form, the dealer or the businessman can take these best advantages also, that they have the another facility to take the inter credit benefit of CGST and SGST to certain extent. So this is all about my today's video, and student, please note that I am trying my level best to aid any value education to your knowledge in this period of crisis, and I look forward to your suggestions, your feedback, your queries, as well as your appreciation, because your appreciation, your feedback gives me pleasure, and it is my motivation to do much better in future. So keep loving, and take care. Bye bye. Thank you.